Hey traders, Raghee here. And one of the things I like to do in these free videos is show the consistency in certain ideas and analysis. And yesterday we talked quite a bit about the yen and how it played a role in my trades where the yen was quite weak, and that indicated that we don't want to be short. Now, what about today? Let me show you the chart of the yen today, because again, before the market opened, we saw some weakness. We wanted to see what the yen had to say about it. And one of the things that's really interesting about looking at certain currencies, and I'll get to this setup as well, but I'm trying to find the setup that we had in the chart that I captured. Here it is. Okay, 9:40 a.m. That's the one I wanted to share with you all. So this was from 9:40 a.m. Eastern, and again, it's not just blindly letting the yen dictate if we're going to be bullish or bearish, but if the yen is at one end of the extreme or the other, meaning it's either the first or second strength story, or it's the first or second weakness story, in the middle, I really am just not interested. But if it's out here, I think there's usually something the yen is telling us. And I think the yen pretty much being strong most of the day indicated that I really shouldn't look for one of those initial balance breaches and just one of those grinding or trending days at all. In fact, here are the setups that we took this morning in the chat. Now, in the past, you've heard me talk about HPMRs. We use them every day. This is a process that I invented using AutoChartist data quite some time ago. What is the formula? The formula is every hour of day, there is a certain amount of historical expected price movement range, and we can project a high or low based on that. And that's what this is. So we can plug this in for anything. I use this, of course, as a futures trader, predominantly in futures, but I can use this at Apple. I can use this in Boeing. I could use this in anything that I have the AutoChartist data on and project these hourly price movement range, highs and lows. All right, so with that being said, we're waiting for our clearing range breach. But during the 9:30 to 10 o'clock, 30-minute clearing, we sunk into, this is the first trade of the day, we sunk into the lower end of the range. Now, this is the HPMR low. It's a projected low that calculates once we put in a high, there's a certain number of pips or points or ticks we see in a market, and then it automatically projects a low. How far could we go down to sort of complete the typical hourly price movement range between 9 and 10, okay? All right, so with that being said, we traded down into that area. Now, for those of you that are curious, do I do this before the bell? Not usually. I'll usually not concern myself with this before the bell. So there's the bell. And some of you might say, well, Rog, we had a short here, with yen strength early. Could we have taken that? You sure could have. I just didn't end up taking it. And so I ended up taking this buy down in here. And the truth of the matter is, yeah, you could say that I only got one half of the trade. So this could have been far more bang for my buck and time. But we bought this zone right after the open, and that's an HPMR support zone. I also like the fact that we had really good V-score support. Again, another tool that I created for myself about 15, 17 years ago, which is simply the standard deviation between the price and the volume weighted average price. Nothing earth shattering, just something that didn't exist when I was looking to understand volume weighted average price and price on a standard deviation basis. So that's what this is. Now, by the way, for those of you that are wondering, was that confirming the short? It sure was. And I'm kind of kicking myself for missing half of it. So nonetheless, we had a really nice move to the upside off the HPMR V-score confirmed level, which was great. And then we kind of exhausted. We kind of stayed in a range, which, I'll jump into some of this criteria in the premium video, but by 10:30, we were saying, look, if the market wanders to the upper end of the range, short it. If it wanders down to the bottom end of the range, buy it, because we're probably looking at a market that's going to stay range bound and choppy and not trend. We could figure that out from two things. One of them was the yen, the other one's the range of the morning. So the other market we did the exact same thing on was the Russell. Same idea, again, traded down into that low, moved higher. And then one of the things we did as we wound down the morning day trading session is I said, hey, you know what, up in this area, let's look at some IWM puts. Let's look at some puts to take advantage of the movement lower. Okay, we traded right back up into that HPMR resistance, had some really good V-score resistance, and that's what we went with there. So I hope this kind of gives you an idea of what we do in the chat room every morning. This is what I was looking for, and this is a little bit more of an aggressive hourly price movement range exhaustion approach because that is what the environment told us. In fact, it's that yen, additionally, that gave us some insight into why we should not expect this market to trend higher throughout the day. So day number 2, example number 2, I hope this helps, and I'll see you in the next update.